Born to be free, B2B. This is my professor, Mark. He will guide us through the market. So, Mark, what do you got going for us today besides Putin barely slipping out of a coup?
Well, I think this is going to be pretty messed up because it shows that he's got a really no, power. Like he was, like his leadership style comes from the fact that he's a ruthless badass, or
Yeah.
people thought that, and now apparently he's not. So I don't really know what the hell is going on. I don't know how 8,000 mercenaries could try to take over a country of how many 100 million people. Um, I don't know. I don't know. I mean, it's pretty amazing that they're fighting this war um, with
Mercenary.
mercenaries. Yeah, I mean, think
See, I
about it.
don't know that Russia's as strong as we think they are. I think they've been made to be the big bad bear behind the curtain, and I don't think they're that anymore. Honestly, I mean, if you think about it, Mark, I think we've expanded to like 758 bases around the world, is what the American military has now. That's senseless. There's no reason for us to be in 758 military bases when we gave up the really only one we needed to be in, which was Bagram. We need to pull our people back and worry about our country for a while, I believe.
Well, what we need to do is get rid of this corrupt administration that we have because
Yeah.
you
Well,
know
that's all. I mean, that's what today is. It's a beautiful day, but I'm just waiting to see how diabolical more stuff falls about of Hunter Biden and Joe Biden's diabolical deeds.
I don't get how people could be so stupid. So now the narrative is like, oh well, Hunter might have used the Biden name, but Joe wasn't involved. I mean, listen, man, you don't need to be Dick Tracy or or whatever to figure this out. Okay,
Yet you could be Helen Keller.
the Helen Keller could see this.
Yes.
The Congress had the right to review these suspicious
Activity
fake
report.
transactions, right?
Yeah, they're suspicious activity reports is what they call them.
So Biden comes into the office, and like the first day he's in the office, he changes that rule so Congress can't get them. Now we find out that there's 150 suspicious transaction reports in the Biden name. They got 20 different shell companies. I mean, you don't need to be like a super genius detective to see that there's something there, And it's like,
Yep.
And I think it's the hubris that he's been getting away with this stuff for 50 years and he thinks he can keep getting away from it. And what's kind of, I mean, if it wasn't so sad, it would be funny. But when I was in college, I worked as a security guard. And hello, Meg Gilly. And I took this class on interrogation, on like how to interrogate people, right? This guy who was a detective taught it. And the real quick takeaway is this, is that when men are telling the truth, their eyes wander. But when they lie, they tend to stare, right? For women, it's the opposite. They stare when they're telling the truth and their eyes wander when they're lying. So it's like someone will, like Biden will be up there, like just talking about, whatever this, what was it, the dog face pony soldier or something,
Right.
just talking. And then someone will say, did you know about your son's business transactions? And he just stares right at the camera. Like, no, I did not know anything about his business transactions. Like, he's such a terrible liar. It's just really bad, man.
Well, I read last night that he lawyered up, so that means it's a done deal. He knows that his goose is cooked. And I'm going to tell you something.
Wait, where did you hear that? What do you mean he lawyered up?
I saw it last night on a news thing there at the end, around midnight. It came across YouTube before I was going to bed. And I saw it, but I don't remember exactly where it was. I'll find it and send you the link today. But they were talking about how he was fixing to lawyer up, or how he had lawyered up. And I tell you what, that would be a beautiful thing for them to be done. And you know what really the sad part about this whole thing is you have to really kick back and think about yourself from different perspectives. I mean, look at the amount of lives that have been ruined by people like this guy, by changing policies and shifting exactly what we want to do for his own personal benefit. You cause all these ripples across the whole world when you're in charge, like they are when they're the American president. And it's just disgusting that they're doing this for themselves. It's really a disgrace to the office. And people like John Adams and George Washington would be rolling over in their grave.
Oh my God, that's what really gets me.
Disgusting.
Like, I mean,
disgusting.
I'm a big George Washington fan. I even have a portrait of him back here.
Yeah,
and I think he's like one of the greatest men to ever live, because we wouldn't have our country if it wasn't for him. And when you see like Biden speaking and you see the portrait of George Washington in the background, you think that this crooked, narrow-minded man occupies the same office that Lincoln did and Washington did. It's really just bad. And the whole thing was based on lies. The media for 4 years pumped this whole Russia narrative, which is so stupid. I remember people saying like, "Oh, Trump was a dictator, but he's also Putin's puppet." So it's like, what is it? Is he a puppet or is he a dictator? You can't be both, you know?
Listen, don't forget about that hot mic with Obama. But
it's a big Sochi, yeah, that's real.
Right before they went into Sochi, so they can lay all this on the Republicans and Donald Trump that they want. But there is clear video evidence of the Democrat Party and the way that they push this narrative with Russia, that they are colluding with Russia, and not even colluding with Russia. They're colluding with oligarchs that are mafia.
Yeah, it's like, well, this whole thing came out of. It's even proven now. It all came out of Hillary Clinton. What was upset that she didn't win the election, so she wanted to. This was her way to get back, and Obama knew it. And my wife is like, "Why are these people protecting Biden?" And I don't think they're protecting Biden. I think they're protecting Obama, because Obama runs the Democratic Party, and the guy's a total narcissist, and he is so afraid of his legacy, and basically the dam is breaking now, and there's no honor amongst thieves. Someone will start singing sooner or later, probably sooner. But Obama knew that there was all this corruption going on with Biden, and he just kind of looked the other way, and that's going to taint his legacy. It's like, well, Obama, you had the most crooked vice president in the country's history. Makes Sparrow Agnew look like a Boy Scout.
Jesus, right? And you know what, though? They've also got Obama in there when he was in the room when they were talking about going after Trump before the election even ever started, the first one in 2016. So he knew that this whole thing was part of that as well. I mean, it's just this really sad state of affairs that we find ourselves in. And it may be the downfall of our country. And you can blame it on that group of people that just decided they progressively wanted to move America towards some absolute trashy thing, I guess. I don't know.
Well, don't forget when Trump came out and said that he could prove that Obama was having an affair. Remember that? Like 8 or 9 years. So Obama, hates the guy's guts, because it's like,
absolutely.
You don't talk about some dude's woman. That's all.
That's right. That's right. Hey, listen, let's get to the market. Give these guys what they came here for this morning.
All right. So let's just see what's going on. It looks like we're pretty flat. As we talk about frequently, let me just show you all of this. The market is the sum of its parts, right? And if you study the parts, you can get an idea of where the market is going. So here's our S&P 500 ETF, which tracks the S&P 500. And we have these different sectors here, okay? Tech, healthcare, financials, consumer discretionary, consumer communication services, consumer staples is bigger than industrials. Oh, no, it's not. This is, my eyes aren't working. All right, consumer staples, industrials, utilities. So different things run the market at different times. Different things are in the driver's seat. And sometimes it's kind of easy to figure out, and sometimes it's not. I think that right now we're at one of those times that is easy, because forget big tech. I think it's all about financials. And I think that in addition to it being all about financials, I'm going to bring up the financial ETF that tracks the financial sector. So you can see this looks pretty weak, right? So we got resistance around this level here. And this is an ETF that tracks the financial sector. And we could see that support over here converted into resistance over here. There's a frequent thing that happens in markets. We know that some price levels are more important than others. And this, for whatever reason, the market likes this level. So we have people who bought back here who, assuming they held onto their shares when the price went lower, they regret buying, and they tell themselves they're going to get out, but only if they can and break even. So you have these remorseful buyers placing sell orders. That's what put a top on the market here, right? A level that was support can become resistance. Now, a lot of times when we get to resistance level, we sell right off, like we did there, and we did there, and we have been over the last week. Mm-hmm. And this happens because there are investors who want to sell, and they're watching the shares, and they notice that, oh, gee, the price isn't going higher anymore. So therefore, if the price isn't going any higher, that must mean that there are new sellers coming into the market. The markets go higher when there's not enough supply or sellers to fill all the demand, or buy orders. So the buyers are forced to pay higher prices, right? When we get to a resistance level, the tide turns. There is enough supply. So these investors are saying to themselves, gee, why is the stock not, or why are the shares going any higher? Oh, there must be new sellers coming into the market. Now there's enough supply to fill all of the demand, and we've stopped going higher. Some of these sellers start to get anxious that they're going to miss out because the buyers are going to go to whoever is willing to sell at the lowest price. So if you're trying to sell a 33.50 and there's someone who's willing to sell a 33.40, that's who the buyers are going to go to. So these sellers, these investors or these sellers start to get anxious and they start to undercut each other, and it becomes this like snowball effect. See, get there, we sell off, get there, we sell. And then the opposite is true when we get to support. When the market's going lower, there's not enough demand to absorb all the supply. So when we get to support level, there is, and then the buyers start to get anxious that they're going to miss because the sellers are going to go to whoever's willing to pay the highest price. You were saying this morning, we were talking about how people tend to overthink the market.
Mm-hmm.
And I think that's totally true. I mean, it's really just supply and demand. I mean, if you could understand supply and demand, you could understand how to trade. Well, at least you could understand what these charts are showing here. Look at this here, right? We got our support turns into resistance, resistance turns into support, support turns into resistance. For whatever reason, we like this level. Now, resistance could turn into support because of the opposite, seller's remorse. People sell and the price goes higher. They tell themselves, I made a mistake. If I can, I'm going to buy my shares back, but only if I can get them at the same price I sold them at. So now within the financial sector, we have industries. And I think right now, the most important thing to watch, at least for me, is what's going on with the banks here. Now, this is our bank ETF. Well, it says it hasn't traded this morning, but it probably has. And it's, same thing. We get up to resistance and we just get this big sell off. Now we're down below this important $35 level. I mean, at the very least, we could get down to, I think we get down to the former low. And I mean, that's a 10% move.
Yeah.
So that's pretty big. So that's the main thing I'm watching, but we'll take a look at the S&P. Let's see. And, what was the ETF that we were watching that was our Putin death play? Remember?
Oh, CEE.
CEE?
Yeah, the Central Eastern European Exchange.
Let's take a look at that.
Oh, it's been doing good.
Oh, wow. Look at that. Jeez.
Trust me, I'm holding thick.
Oh, you have it?
Oh, yeah. I bought this the moment that when it got down in October, after the war started, I started loading up because it goes right back to 30 once the exchange gets back open and people start trading again.
Yeah. This is our Putin death play. And you'll notice how, despite all the news about, Russia, Putin, this, that, or the other thing, what do we have? Support turned into resistance. Right? Yep. And even on Friday, it got all the way up to 1032, but then it came back down and closed below this resistance level. So, yeah, this is probably, and I'm sure, we're not the only people that are thinking this. That's why we have to move. But, in my opinion, Putin's days are numbered. And I think when I don't know if it's going to be a week or if it's going to be 6 months, but in my opinion, this thing is going to skyrocket when he's out and they reopen the exchanges and so forth. So, yeah, so keep that on the radar screen. All right, let's take a look at the S&P 500 here. All right, so trading flat, not surprising. Probably going to be a little bit of support here because it was resistance level back here. Mm-hmm. But, if those banks start to go, this is going to break right through, and next stop is probably down around 415.
So there's really no strength in the market. And once these banks give away, it's pretty much set to do what it's supposed to do.
Yeah, because banks are like energy, regardless of what business you're in, you need them.
Right.
So it's not like lumber prices are falling. It's going to affect the entire market, but the banks start coming apart. And a lot of these banks have invested their money in commercial real estate. They don't, when you go to the bank and you deposit money, they don't put it in a vault. They go out to invest it to try to get a better return than what they're got to pay you, and they keep the difference. So
yeah,
they're very into commercial real estate because it's considered safe, right? But now we got this whole work from home thing going on, and that's depressing the rental prices of commercial real estate. So, look, put it this way: the market is never wrong, right? Politicians are wrong.
Amen to that.
Analysts are wrong, but we heard all this talk about, Biden comes out and says, oh, the banking system is stable, and Janet Yellen and, whatever. I mean, does that look like the chart of something that's like being bailed out and being stapled or being stabilized? No. I mean, if it was, it'd be going up, right? But it's not. It's going down. So you don't need to be a supermarket genius to see something's going on here.
Well, it's that
Um,
transitory is sticky.
if banks do start to collapse, there is a play here where if you're not an options trader, this is a pretty cool ETF. This is designed to go 3 times in the opposite direction of the financial sector, whichever financial index this follows. So there's always ways to make money. The market starts to fall apart and the financials start to fall apart. This thing's going to take off. Like this is what happened here when the banks first came apart, right? The thing skyrocketed. It went from 17 up to 25.
Yeah.
All right. So I think, big tech was in the driver's seat for a while there, but now I think it's just going to be all about the financials. Here's our tech sector. We can see, we got up to a level that was resistance and we sold off. And why would a level that was resistance be resistance again? Well, because there are people who bought back here who regret doing so, and they held on the whole time. And now that we're back up to here, they want to sell and get out at break even. So that's why you tend to get resistance at former peaks. It's not just like some symbolic thing. There's a reason behind it, and it's supply and demand and psychology. And we have the psychology of investors who are underwater and they want to get out of break even. And I'll bet you a lot of people who are listening to me right now know that feeling. They buy something, but it goes lower. Then they tell themselves, I made a mistake. I'm going to buy my shares back. I'm going to sell my shares.
God, I've done it. I've gone through the whole textbook buy and hold until you just bleed your eyes to death, and then you sell it, and then 2 months later it starts going back up. You're like, Jesus. But now that was in the beginning, and now I've kind of understood the way to do this, and it's become beneficial to me. To the longer I've stuck around with you, you've molded me into kind of a pretty decent trader.
Yeah, it's it's if you pay attention to the right stuff, it's not as hard as people tend to think. I mean,
Yeah.
it's unfortunate, but people are very confused about Wall Street, and there's a solid reason for that. And I think the main reason is that the media gives so much misinformation about what goes on. And you got to understand, these people that are these financial commentators are, for the most part, journalists. They're not former traders, so they don't really know how things work. And probably the worst, I think, of that is when the market's like, oh, the market's up, the market's up 30 basis points because of or down 30 basis points because of worries about the debt ceiling. It's like, no, the 95% of the time when the market's moving, it's because of the psychological element. Someone's coming off resistance, someone's coming off of support. It's very, very, very rare that the media is correct. Like in the institutional trading world, people aren't sitting around watching CNBC saying, oh my God, the Turkish lira is going lower. That means we better sell. I mean, it just doesn't work like that. The vast majority of investors and traders have preset strategies that they're going to just enact regardless of what's going on. The only thing that really affects the market in terms of news is things that have to do with interest rates. But, and you know what? I'll show you a perfect example of where I can prove, depending on how you want to look at it, how the media is so wrong. Now, we're going to go back to here. Let me just think here. All right, so this is where the war in Ukraine breaks out, right?
Mm-hmm.
So we heard is, oh, the market's down because of Ukraine. The market's down because of Ukraine. The market's down because of Ukraine. And if you remember, I said, no, the market has what goes on in Ukraine, unless it spills out of control, is not going to have an effect on our market. So guess what happened over here? Well, the war was still going on, and then the market started to go higher. So do you need to be a detective to know, oh, someone's saying the market's going down because of the war, but now the market is going up. So they must have been wrong in their assertion. So anyway, yeah, so that, that's why people don't understand. Then you have a lot of these, I especially see them like on YouTube, these quote unquote technical analysts or these people that are trying to teach people how to trade. And they, people just don't really know what the hell they're talking about. People just like to regurgitate what they've heard someone else say somewhere.
Well, people like to be entertained too, and somebody throws up some talking about the magic number this or the my stock guru gave me this, or you know what I mean. It's just it drags people in instead of them really realizing that it is kind of simple. And if you do stick by the principles of support and resistance and price action and volatility, you can make some good money in this business.
Yeah, yeah. I mean, that's what the best traders do. They don't have secret formulas. They pay attention to which price levels are important, what's the trend, and what's the momentum driving. I mean, think about it. You can base in your entire life's trading on this, right? Oversold markets that get to support tend to bounce, and overbought markets that get to resistance tend to sell off. Think about it. What is support? Oh, it's a large group of investors who are trying to buy at or close to the same price.
Yep.
And when something gets oversold, what does that do? That draws buyers into the market because they are going to be anticipating a reversion to the mean. So you got the investors who are creating the support that are buyers, and then you're going to have new buyers coming into the market because it's oversold, and that just sets the stage for something to move higher. It doesn't need to be like this, mystical, or it's actually kind of funny. But it's like you said, people like to be entertained, and people want to think like, oh, I lost money because of some market maker or some hedge fund guy ripped me off. I mean, that's just asinine. Think about it.
Right.
Every buy, there's a sell. So there were people selling up here while there were people buying up here. So are the sellers trying to rip the buyers off because they know that the market's going to go lower? No, it's just they just have different opinions. When you buy a stock, there's someone who's selling it to you. They have the exact same or the exact opposite opinion of what you do. If you sell something, someone's buying it from you. You sell something because you think it's going to go lower. They buy because they think it's going to go higher. So every single trade that there is, you could argue, oh, well, this person's trying to rip off the person on the other side of the trade. You know what I mean? It's just not how it really works in the real world.
Yeah.
Here's our self-care sector. You can see this is kind of going sideways. Heard there's all this like Ozempic and everything. People are starting now to see that there's like pretty bad side effects. One of them being could cause thyroid cancer. And my wife actually knows someone whose husband got thyroid cancer, and he was on those drugs. Here's our industrials. This is kind of rolling over, but here we can see we got clear resistance around 103.50. We got clear support around 97. You don't need to be a market guru to see that, right? And let's see. Let's look at our consumer discretionary. So we got 2 new members of the family this weekend. We adopted 2 new rescue guinea pigs.
Nice. What do you got, like a guinea pig rescue association up there in Connecticut or something? Because I've never heard of that many guinea pigs being rescued.
Yeah, we're up to number 11 now.
Wow.
That we've had over the last couple of years.
That's cool.
Well, we know someone. Well, my cousin knew someone or knows someone who they had these guinea pigs, but their daughter was allergic to the hay. So they had to get rid of them. So, most of them just ended up in some shelter somewhere. See, the thing is older guinea pigs, no one really wants. If they're babies, people adopt them.
Yeah.
It's like a golden retriever puppy is going to get adopted, but like a big older dog is going to have a much harder time. And that's where we adopted Clifford and Lola from, was from a shelter that they try to place older dogs. We got Clifford. They said he was 6, and we got him 7 years ago. And there's no way he's 13. At least I don't think so. Because he's in really good shape. I mean, it's incredible. He could like hold it in literally for 24 hours.
Well, he's not that old then.
Yeah, and he's like he knows how it's almost like he wants to like bribe me. Like he'll refuse to go outside to go to the bathroom unless I tell him we're going on a hike.
Oh.
And we have the trails across the street. So if I say let's go on a hike, he knows what hike means. But if I just say let's go outside, he'll just sit there and kind of like stare at me. So it's like, all right, well, you want me to go outside? I'm gonna make you take me for a hike.
I've been going through it with mine. I've moved them here to this place where we're living now, and they have just not been good. But now they're starting to come around.
Why not? Because it's an unfamiliar environment.
Yeah, unfamiliar environment. They don't have as much yard as they do, and now they're just chase each other around the pool all morning. It's ridiculous, but it's fun to watch. They're good pups.
Do they swim?
They do in natural ponds, but I haven't been able to get them in the pool yet.
All right.
But one of them's going to fall in the pool, so they're gonna be in there soon enough.
All right. Anyway, just looking at here at oil, I just want to go through the commodities.
Yes.
That's oil. And for those of you who don't trade futures, there are ETFs that pretty much track all of these um, commodities that I'm going to look at here. Look at this. So natural gas looks like it could have some upside.
That's been dead for a long time.
Now, notice how we've gotten above this former resistance level here around 260. What is resistance, right? It's a large group of sellers. And we get above it, it tells us something. This is what we call a breakout. It tells us that the investors who created the resistance with their sell orders are out of the market. So if they're out of the market, the buyers are forced to pay higher prices, and that's what drives us into an uptrend. I mean, I think this thing could get up to my target would be up around here, this former peak. So that's $3, and that's another thing that shows you this psychological aspect of the markets. I mean, think about how big the natural gas market is all over the world. You know, trillions and trillions and trillions of dollars, and yet somehow it stalls out right at $3 exactly. I mean, how could that possibly happen? You know, how is it not 292 or 312? Well, people who trade commodities are people, and people like nice round levels. So they tell themselves, hey, this thing gets to 3, I'm going to sell. I look down here. This is 2. We found support at 2. So this is in defiance of what many people in the financial community think. If you didn't think about psychology, you really couldn't explain why does this multi-trillion-dollar market, you know, with people trading continuously around the clock all over the world, why does this thing just happen to find support or resistance at these perfectly round levels, like $2, right, $3? That's a psychological element. You can't explain that with fundamentals. Well, I mean, market fundamentals explain it, but fundamentals of, like, you know, what's the latest report on stockpiles of natural gas and so forth and so on. I think people should pretty much just shut off the news. And, you know, if I was on a desert island and I had my charts and I didn't have the news, I really don't think that my my analysis would be that much different. You know, I just don't, because I just, the news is wrong and it's just going to confuse you most of the time.
Yeah, I haven't listened in months. I mean, I listen to the political news just because I'm a junkie for that. But stock market news, I haven't watched Fox Business in about 6 months, probably.
Yeah, I mean, they're kind of, I think, the worst in the sense of, like, you know, I mean, listen, I'm not saying they're bad people, and I like them, but, you know, like Liz Clayman and Stuart Varney, they're like, you know, every time the market moves a teeny tiny bit, they try to attribute it to some ulterior motive, and most of the time it's just random noise. It's just order flow. There are millions and millions of investors, and some people are buying. You know, maybe someone sells a stock because they want to raise money to pay for their kid to go off to college. All right. Well, so the stock goes down. Now, is it down because someone's selling it to pay for their kid to go off to college, or is it down because that person's worried about the debt ceiling? You know what I'm saying?
Right.
So, and very few. I mean, I've never seen people, at least in my world, who are sitting there just like trading off the headlines. It's just not how it works, man. You know, there's not this like one-to-one correlation of like we saw, what was it, like last week? It was gold. Yeah, it was gold. Like gold is let me bring up gold here. GC1. Like, all right, well, gold is down because of, you know, the weakness in the dollar or strength in the dollar or whatever they were attributing it to. And it's like, it was a day where it had moved like, you know, like 5 basis points or 10 basis points. And people are not sitting around saying, oh, weakness in the dollar, I'm going to go buy gold or I'm going to go sell gold. It's just the psychology. You know, why do we bounce off a resistance? Is it because of concerns over the Turkish lira? Or is it because we have remorseful buyers who sell at the same level they bought at, and then we have sellers worrying that they're not going to get their in this case contracts off, so they start to undercut each other. I mean, that's why this was down on this particular day, Friday the 2nd, right? That's why this was down 1.3%. It's because anxious sellers were undercutting each other. It has nothing to do with some kind of fundamental story. Look at this, right? I mean, this is gold going back 3 years. And
Wow.
look where we found resistance
Yeah.
here, here, and here. I mean, how do you explain that? The dollar is at a different level, interest rates are at different levels. If you don't if you don't look at this through the prism of supply and demand and psychology, you're just never going to figure out what the heck is going on.
Well, and the news would be different for all three of those different times that had spiked up to that 2085 level.
Yeah, I mean, they would be whatever the media would be attributing it to
Right.
is, it's wrong. I mean, that's not what moves markets. News stories very, very, very rarely move markets unless it has something to do with interest rates. All right, what is going on? Let me see this. Traders bet bull market is just getting started.
Shit.
This is like these tend to be contrarian articles, like when people are like, oh, things are great. Well, that's when markets tend to go down. Everyone wants a piece of the new market. Well, what does this mean? It means people that think the market's going to go up have been invested. What happens when they run out of funds to invest? They spent all their money, or they invested all they wanted to. Well, then the market runs out of buyers, and the only place it can go is lower.
Is there somewhere that they calculate, Mark, the amount of positive articles versus negative articles at the market to determine if it matches up with bull and bear for the day?
Not that I'm aware of, but it's pretty. There's like historical examples that people often talk about, like like right before the market crashed in '87, like Barron's had a big, their monthly issue had a big bull on the cover. You know what I mean? So sentiment's a tricky thing because you can't really quantify it in a lot of ways. People try to quantify it with options, puts and calls, and so forth. It used to be a long time ago, the put call ratio was pretty much almost infallible. And basically what that meant was that if there's an excessive amount of call buying going on, people are very bullish and the market runs out of buyers and the only place it can go is down. If there's an excessive amount of put buyers, puts being contracts that go up if the market goes down. So if you're bearish, you buy puts. If there's an excessive amount of put buying, well, the market runs out of sellers and then the only way it can go is higher. Now, what's happened over the last 2 decades is we've had all these like inverse ETFs. So you could be bearish on the market and you can go out and buy calls on an ETF that's going to go up if the market goes down. So I don't think the put call ratio really works anymore. I don't even look at it, frankly.
Yeah.
But we have the big thing that happened over the last couple weeks here. This is something that we look at too, is the sentiment survey. And this was a really huge jump. This is the AAII, the American Association of Individual Investors. And this shows how many people said they were bullish. In the end of May, it was 29%, but then within 1 week, that jumped all the way up by about 15 points. I mean, that's a huge, huge change.
Is that really believable, though?
I
mean, have things gotten that much better in 6 days?
Well, people got caught up in this whole
AI?
artificial intelligence thing.
The AI, yeah.
And, guess what? Well, let's take a look at the tech sector here. Look at the tech ETF. All right, so we saw that people got excessively bullish on May 31st. So that was right.
Yeah.
So right here. And we got a little bit higher and now we're coming back in. So I think the market is kind of running out of, like, people that wanted to invest have invested. And now the market runs out of buyers and the only way it can go is down. And this is kind of telling too. We had a big move lower on Friday and there's really no kind of rebound whatsoever this morning here.
Right.
But again, I think the important thing to watch is the financials. I think that, when Putin is done, this C is going to be the Putin death play.
Listen, it probably will be. It's going to be like what was that called? What was that movie called with Clint Eastwood? Was it the Deadpool? The Deadpool.
Yeah. Well, he's been a lot. I was watching Unforgiven this weekend. That's a really good movie.
That was a good movie, yeah.
Yeah. All right, listen, I got to go jump on this other call, which I'm now 4 minutes late for. But thanks for tuning in, everybody, and we'll be back tomorrow. And I will see you then.
Have a wonderful day.
All right, thanks. I'll talk to you. I'll see you at 11.